This is your LMAX Exchange technical update for Monday, September 12th, 2016. Euro dollar. So overall, the euro remains pressured to the downside, and it looks like the market could be looking for that next lower top ahead of a fresh downside extension back towards next key medium-term support at 109.12. At this point, it would take a break back above that high that we saw on the 18th of August at 13.67 to take the immediate pressure off the downside. Sterling dollar. So cable has been locked within a broad consolidation, a bearish consolidation over the past several weeks, and while the market holds below 135.33, that high that we saw on the 29th of June, the risk is for another topside failure and break back down towards the range lows, those plus 30-year lows from July at 128, just around 128, and for a break below there towards 125 further down. At this point, only back above 135.33 will compromise the bearish outlook. Dollar yen. Dollar yen remains confined to a well-defined downtrend, and the market is looking for that next lower top, potentially now in place at 104.32, ahead of a drop back below the recent 2016 and multi-month low at 98.99. Euro Swiss. Euro Swiss has been confined to a choppy consolidation roughly between 108 and 110, and it's going to take a break above 110 or back below 108 for a clearer directional insight. Until then, continue to play the range highs and range lows. Aussie dollar. Aussie looks to be putting in a meaningful lower top at 77.58 following this latest topside rejection ahead of that level and bearish downside back towards some critical support now at 74.21. Look for a break below 74.21 over the coming sessions to open a more pronounced and accelerated decline towards critical support down around 71.45. Dollar CAD. Dollar CAD continues to look highly constructive as it forms a major base. Look for fresh upside now back towards critical resistance at 32.54 with a break above to open the next major upside extension towards 135 to 140. At this point, only back below 26.55 would compromise this constructive outlook for dollar CAD. Kiwi dollar. So Kiwi is finally stalled out at 2016 highs, just shy of 75, and it looks like the market could be in the process of carving a more meaningful top. A break back below 72.04 will confirm and accelerate declines towards next critical support at 69.52. SPX 500. So the most significant setback in the S&P 500 in quite some time on Friday, and this break below critical support at 21.47 is a significant development as it opens the door for a more meaningful top and acceleration towards medium-term support, which now comes in the form of that low that we saw back in June around 1990. Look for any rallies from here to be very well capped towards 21.70 with only a break back above the 21.80 area to compromise this newly adopted bearish outlook on the S&P 500. Gold. So gold has seen some setbacks over the past few sessions, but overall this market continues to trend higher and is expected to be well supported once again on dips towards the 100-day moving average in favor of that next major upside extension beyond the 2016 peak at 1375 and towards 1500 further up. At this point, only black below the 100-day moving average would delay the constructive outlook for gold.